Hey everybody, Doug Smaldino. Happy Friday. Hope everyone's doing well. It's Friday evening, July 8th, and just doing a video here for you guys. Getting a lot of calls on what's going on with the market and the economy and where everything sits. What about purchasing a house? Do I buy now? Do I wait? Look, guys, a lot of stuff here, and I know everyone's just loaded with questions, and the news is crazy. Look, let's just unpack this a little bit right now, and then in the link below you're going to see there's I'm having a Zoom meeting on Tuesday evening from 6 to 7:30. Get your hot dog, get your burger, get a little dinner. We can jump on a quick Zoom meeting. I've only got limited to, it's only 100 people available, but I'll do it again because I know there's a lot of, I'm getting just blown up. I'm sure we're going to have more than 100 people on the meeting. But if you miss it, don't worry about it because we're going to have another one probably later in the week or next week, so or the week after. So look, guys, let me just unpack a couple things for you. First of all, I see a lot of good news. I'm very optimistic. Most of you know I am the eternal optimist. I'm not a pessimist. The glass is always half full, okay? But let's start with a couple things what's going on right now because I know it's been a rough year, okay? I just crying in my beer looking at my financial statement year to date. I'm like, ugh. But bottom line is let's look at where we are, okay? Let's bring it in and talk about here, okay? First of all, today, got on my screen here, the jobs report. Now, we're talking about inflation, which is a lot of the stuff's overblown, okay? Like, keep in mind, there's the big companies, the big traders out there, they love volatility in the markets. That's where they make their money, okay? So a lot of the stuff that's overblown, over-dramatized. Like yesterday, for example, they read the minutes from the Federal Reserve. The minutes said, well, if the raising of the rate hike isn't enough, we're going to have to be more aggressive. And the market crashed. And I'm sitting here shaking, scratching my head saying, that's just like saying if I put gas in my car and I drive to Dodger Stadium, but I don't have enough gas in the car, I got to get off and get more gas, then I go to Dodger Stadium. What? I mean, it means nothing, okay? But the market freaks out. I'll show you a chart just in a second here. Look, guys, we're not entering no recession anytime soon, okay? Today is, like it says right here, payrolls increased. Non-farm payrolls in June increased by 372,000, topping the 250,000 estimate. The unemployment remained at 3.6%. That's about where they want it. It's pretty good. It's running a little hot. I get it. And the Federal Reserve, by the way, meets on July 26th and 7th. They're probably going to raise it a little bit. But guess what, guys? In the last few trading days, mortgage rates have been drifting down, except for yesterday. I'll show you that in a second. But here's what's going on, and I think the reason I'm so up about this is because I got a lot of people out there just that want to wait before they buy a house or before they get into escrow, and there's opportunity right now. Right now, you can get a property that's not going to have 45 offers on it. Got one in escrow yesterday over in El Sereno. There was 8 offers on it. Okay, so it's not like it's that in every property, but there is a lot of properties and a lot of opportunities there. Sellers being a little more realistic. They're getting the FOMO, like, oh shit, they missed out from last year. You know, bottom line, great opportunity. Nothing to wait for because all you got to wait for next year is higher prices. And real estate, there ain't going to be no crash in real estate. Believe me. Sorry, it's just not going to happen. Anyway, we got the jobs report. This is what's going on now. Now let's look at here. This is my favorite part. This is the spoiler alert, the stock market. You guys don't know this, but I'm a stock market guru, okay? I am the guru, but I love the stock market. I've been a student of the stock market. I'm not a financial advisor. I'm not giving financial advice. Got to say that to keep the old attorney happy. But bottom line is this, is a stock market, you know, you look at what's going on. Here, check this out. Look, you see this red line here. And by the way, this is right on Investors Business Daily. If you guys want to know anything about the stock market, just go to investors.com. Anything you ever want to know about the stock market, it's all right there, one website. You don't need anything else, okay? It's all you got right there. But bottom line, the red line, the 50-day moving average, you can see that, you know, look, it's still choppy, okay? Look, I'm not going to say the stock market's been choppy, but I feel it's like getting its legs here the last couple of weeks. Now, look here, we got 5 consecutive up days in the trading. Okay, the market's been positive. We're right there. You see that red line and the blue line? We're right there at the 50-day moving average. Okay, that's awesome. We get over the 50-day moving average. From a statistics point of perspective, we could see a higher stock market. Higher stock market means more confidence buyers. People say, hey, my 401k is back up. Now's the time to get into real estate. So stock market's performing well. 5 straight up days in a row. It's good. We had something called the follow-through day. It's looking good. This is a very bull market sign. Because it's going to say, look, this is telling us what's going to happen in the future. That's what the stock market is. It's a crystal ball, so to speak. Okay, look, the stock market's doing better. Mortgage rates. Let's look at mortgage rates now. Here's the graph on the mortgage-backed security. Now, look, we've been beat up. I'm not going to lie. We've been beat up year to date. You know, starting back here in January. All this red means the mortgage-backed security price went down, which pushed mortgage rates up. But look what's happened here since June 15th. We've seen an uptrend in the price of the mortgage-backed security, which is pushing the mortgage rates down. Now, we had this big dip yesterday because, I don't know, the Federal Reserve said they might have to do something else. Whatever they're going to do, they're going to do. It's probably going to help mortgage rates because last time they raised 3/4 last month, it decreased interest rates. Okay? Look, bottom line, guys, is this. That's all I'm going to give you for today. All right? A lot more we could talk about. It's a Q&A. Register for the meeting on Tuesday, 7:30, and we can bring your questions. And we're going to answer this because I can tell you something right now. Mortgage rates should not be this high. Real estate prices are not going anyplace. And now is a great window. You got a little window, I'd say, between now and December-ish to get in there. Okay, so let's talk about it. And hit me up back. If you can't make the meeting on Tuesday, please email me. Trying to get reply to as many questions as I can. But I'm only one guy, but I will reply. All right, guys? So, hey. Be well. Have a wonderful weekend, and hopefully we'll see you on Tuesday. Okay? Cheers, guys.